So this G9 cell matrix we were discussing. In this you'll be able to see there are 9 cells. If we take this first cell, that is protect position. Okay. So on the basis of vertical and horizontal axis, if we see this first cell, which talks about protect position, wherein the business strength is very high. Also, the industry is very attractive for that particular business. So the industry is very attractive for the particular business, and also the company has strengths which can help the company to get or to take the benefit of all those opportunities. So this is a very attractive position that we can categorize as a protect position. Second position is invest to build. Herein you will see the industry attractiveness is medium, and the business trends we have very high. We have high business trends, but the industry is medium attractive. So we can invest so as to build the market for particular business. If you see this third position, that is build selectively. Here the business trends we have are medium. We have moderate kind of business trends. However, the industry is very attractive. So this is also in green zone, wherein we can build that type of product or business, but selectively. Selective type of strategy we will use. We will and identify only those particular businesses which can have high industry attractiveness, and then selectively we'll focus on few opportunities so as to get the benefit from those opportunities. So three positions we have now discussed, that is this green zone, wherein we have three important positions. Protect position, wherein the business strengths are very high, as well as industry is very attractive, that is protect position. Second position, wherein industry attractiveness is medium, however the company has high business trends, so we can invest so as to build the business into that particular segment. Third position is build selectively. Herein the business trends we have are limited or medium moderate kind of, however the industry is highly attractive, therefore we can build selectively. So this green zone you will be able to see we have good opportunities, wherein either the industry is attractive and we also have business trends. So this green zone is very attractive for any company. So wherein if you see on this right hand side, this color markings which we have done on this chart or this table, green zone will discuss or will display the characteristic for of particular business for its building and for growth. We can build business and also we can plan for growth in this green zone. Then comes is your yellow zone, which we can discuss one by one. If you see this position, that is at the bottom of this particular chart, wherein the business strength we have are very low. However, the industry is very attractive. Industry is very attractive. However, the business trends we have very low. So this is a position where we can protect and refocus. So we can protect such kind of business units or product lines because the industry is attractive. Even if we do not have the business trends presently, that can be built or that can be managed in further time. So we can protect and refocus on such business units. Therefore, we have given yellow type of a particular color to this category of business units. Second, in this yellow zone, we can discuss wherein the business trends are in medium level. Also, the industry attractiveness is medium, both are medium. So, selectively, we can manage for earnings. So, here also, we can wait and watch. We can think of maintaining the particular investment in those business units and selectively managing these units for earnings through these business units. Another yellow zone category we can see on this right top of this table, wherein the characteristic of this category is the industry attractiveness is very low. Industry is not much attractive for such kind of business. However, we have very high strength for such business. So here also we can give a thought and build selectively investing into few businesses which can reap earnings to the business. So here in yellow zone also you will be able to see we have either moderate strength and industry attractiveness. Either the industry attractiveness can get enhanced in future, or if the industry attractiveness is there and if we do not have strengths, still we can protect such kind of business units so that we can build on the business and can get earnings through such business units. So then we have to discuss about the three important um, type of business units which can be categorized into this red zone. Red zone is something wherein we have to give a lot of thought whether we have to retain those business units or product lines or we shall stop. So here in this red zone we can see on the right hand side which the color uh, which says red is about harvest or divest, whether to retain those business unit or we can stop investing in such business units. That decision we will have to take. So here if we discuss this cells in red zone one by one, first we take this uh, cell wherein we have written limited expansion or harvest. Tell me whether this diagram is visible and are you able to understand what we are discussing? Yogesh, Pooja, Simran. So if you see this cell wherein the business trends are medium, for this category if you see the business trends are medium and the industry attractiveness is very less. So both things are making us to think whether to continue or to stop that particular business unit. However, we can think of limited expansion. We cannot expand the business as the industry attractiveness is very less. If you see this, industry attractiveness is very less for this category, even if we have business trends. However, industry is less attractive. There are no more opportunities which can be taken benefit for having the earnings, and therefore there are limited expansion opportunities or harvest. Another category which we can discuss is the category wherein the industry attractiveness is medium. Industry is attractive, however, there are no much opportunities. So, medium kind of attractiveness we have, and the strengths, if we see the business strengths for this category, are very less. So, this category is also in danger, that is in red zone, wherein we have attractiveness, moderate attractiveness of industry for particular business. However, to get the earnings, we have very less strengths in our business to take the benefit of those opportunities. So here also we have to give a thought, manage for our earnings, and then we have to think of whether to go ahead or stop the business. And the last category which we have to discuss is the category wherein the industry attractiveness is also less and the business strength is also very less. So this kind of business is worth closing. There are no further scope for doing or continuing this business as the industry attractiveness is very less. Business strengths are also very less. On both sides, we do not have any benefit of doing any business in this category, and therefore the businesses under this category can be closed. So here we have written divest. Divest means we can make use of those resources for expanding business in other units. So we can disinvest from this particular business units. So if you see this first sale and the last sale, these are totally opposite. In the first sale, you will see there is business, the market is highly attractive as well as the business trends are also high in number. So it is a highly attractive particular business. So we have protect position, and this sale, which is characterized by low industry attractiveness and low business trends, so we can take a decision of divesting from this type of business unit. So these 9 cells we have discussed. Before we go ahead, I would like to ask you people whether you have any query in this model or this matrix. Do you have any query in this model?
No, sir.
Have you understood this model? Is it understood? Is this model understood? Yogesh, Pallavi,
Yes, sir.
again we have to continue the discussion of this G9 cell model, which is also called as McKinsey matrix. So this matrix we have to again discuss further and see what it implies to the managers. First, in this G9 matrix cell, we have to discuss these three green zones, three green cells. Are you able to see this? Which I want to show you through this cursor. Is it visible? Is it visible? Uh, so this G9 cell matrix we have to discuss for these three different categories, that is green zone, yellow zone and red zone, which we have marked on this table. So in G9 cell matrix, the first zone, which is a green zone, which which is attractive for business or any company. So there you can see three important categories. First is protect position, which is the first cell, wherein the industry attractiveness is also very high and the business trends are also very high. So here what we can do is we can invest. We can invest as many as possible and we can take effort for maintaining the strength. So this cell or this category is very attractive and therefore it should be protected well because both the things are there present. First is industrial attractiveness. Industry is also highly attractive and the business also has high strengths which can be utilized for taking the benefit of those opportunities and therefore we can say it is a protect position. Second position, invest and build. So if we see this category, invest to build, which is characterized by medium industrial attractiveness but very high business strengths. So this position, which is invest to build. So this is a challenge for any leadership. Industry is moderately attractive. However, the business has very high strengths which can be utilized and therefore making the best use of all the available resources for taking benefit of all those opportunities is a challenge for the business. So build selectively on strengths. So here we have to build selectively on the strength so as to take the different opportunities. So as to take the benefit of all those opportunities. The third position here you will be able to see is the build selectively. So this is the position build selectively wherein the industry is very highly attractive. However, the business trends are medium. We do not have high business trends. However, the industry is very attractive and we have moderate kind of strengths, medium strengths, wherein we can build selectively so as to take the benefit. So we can work on the different business trends so as to take the benefit of the different opportunities selectively. So invest in most attractive segment. So as we have here, if you see medium kind of business trends, however industry attractiveness more, we will not be able to get benefit of all the opportunities. We will not be able to exploit or we will not be able to take benefit of each and every opportunities. And therefore we have to build selectively. We have to select few opportunities which can be taken benefit for and therefore invest in most attractive segment, invest in most attractive business or product lines, then build up ability to counter competition. So through whatever strengths we have, we can build our ability to overcome the competition and emphasize profitability by raising the productivity. So here also you can take more benefit of the opportunities by selectively selecting few opportunities and more focus can be given to productivity. Productivity can be enhanced and thereby we can increase the profitability through this kind of uh, a particular segment. So this is a green zone, which wherein there are good opportunities for business, and that can be developed further for investment and growth. So it is a very attractive segment, which is a green zone. Second, which comes is yellow zone. So yellow zone is like your wait and watch. If you see the traffic signals, yellow light that communicates wait and watch and then go, isn't it? Likewise, in this metric also, you will be able to see there are yellow zones which communicates you have to wait, watch, and then go ahead. These cells or these type of business units have future benefit, or they can become profitable, or they can become productive in future, and that is how this can be protected in a hope that it can go into a growth stage further in time. The first category in this kind of yellow zone, we can see protect and refocus. Protect and refocus. So this is the first category which I want to discuss, wherein the industry attractiveness is very high. Industry is very attractive for this business. However, we have very less business strength. So business strength is very low. So what we can do with this kind of business category is protect and refocus. So we can protect such business for the future growth, for future kind of growth or future expansion. We can protect such business. Why? Because there are the industry is highly attractive for this business. Even if we do not have any business strength currently, we can build it and then further grow, and we can expand the market share. Therefore, this category protect and refocus, wherein you have to manage for the current earnings and we have to defend the strength. We have to see to it that how do we enhance our strengths, what can be done so as to increase the capacity of a particular business unit that can be utilized for taking the benefit of many opportunities, as the industry is very attractive for those kind of business. Second category in this is selectively selectivity for earning. That is, if you see this middle category, which is categorized by medium industry attractiveness and medium business strength. So here you can selectively manage your earnings. Selectivity for earning. So here you can protect the existing program or the particular business unit, do invest in profitable segments as the industry has growth opportunities. Also, we may have moderate business trends which can be further enhanced. So it is also worth giving some investments, and therefore we have to protect the existing program as well as we can invest in the profitable segments. We have to identify in that particular zone what are the different profitable opportunities which can be explored. So selectively we can manage this segment for earnings. And then the third category is build selectively. So if you see this particular box, or particular group of business unit which is on the right top of this matrix, that is built selectively. Here the industry attractiveness is very low. However, the business have very high strength in this kind of particular industry, and therefore we can see we can build selectively. We can build our selective expertise in particular business. So we can specialize around limited strength. We can specialize around particular business in the market, and we can have more market share even if the market growth is very less. However, as we have good strengths in that particular area, we can take more benefit of that type of business. Then we have to seek ways to overcome the weaknesses. Whatever weaknesses if we have, we have to see to it that how we can overcome those weaknesses, and then withdraw if indication of sustainable growth are lacking. So here in this category, which is at the right top, the industry growth is very low or industry attractiveness is very less. We have to understand whether the industry has future growth or not. If we have a judgment, or if we have an understanding that that particular business may not grow in future, that may not provide any sustainable growth, we have to take a decision of withdrawing the investment from that kind of business. So that is the yellow zone which we have discussed, wherein these businesses are not highly attractive or not at a very good position. However, we can give a thought and then we can go ahead whether to go ahead or not. If there are good opportunities in future, and if we can build some strengths to take the benefit of all those opportunities, then we can definitely nurture those businesses. So that is about these three yellow groups of segments, and there are three another segments or three different sales which are in a red zone that we have to discuss. These three sales we have to now discuss. So here, limited expansion for harvest. If we see this sale, limited expansion or harvest, here the industry attractiveness is less, as well as business strengths are very less or medium. So it has limited expansion opportunity. Even if we have moderate kind of business trends, but the industry is not so much attractive for expanding business, and therefore we have to take a decision whether to continue or to drop that particular business unit. So this limited expansion for harvest, we have to look for ways to expand without high risk. So at this point, we have to see to it that what is the risk in going ahead. If there is high risk in continuing this business unit, we can take a decision of dropping that particular business line or product line. Second is your manage for earnings. So this segment, manage for earnings, which is categorized by medium industry attorneys and very low business strength. So here what we can do is we can protect our position in profitable segment. We can limit our focus only on few profitable segments, and that is how we can get some earnings through those particular profitable segments by only focus on few attractive businesses. That we can do with this. We can upgrade the product line. As the industry is moderately attractive, what we can do is we can upgrade the product lines, or we can minimize the investment. So these three things can be done, strategies can be developed on these three lines for this kind of a segment of businesses that is managed for earnings. And then the last category, which is divest, that we have to discuss. So harvest or divest, whether to continue this, we have to drop this business, that we have to take decision at this point, because here the industrial attractiveness is very less, and at the same time the business strength is also very low. Therefore, divestment or withdrawing the investment from this kind of business units will be a wise decision. And therefore, we can sell at time that will maximize the cash value. Either we can sell that particular product line or that particular business, or we can cut fixed cost and avoid the investment. So we can avoid the investment, we can cut the fixed cost. That can be also done so as to avoid the losses. So this red zone is a signal wherein we have to think whether to continue the business in that particular category of business or not, and the decision of whether to continue or dropping that particular business unit can be taken. So this is about the G9 sale matrix which we have discussed. So before we stop, do you have any queries on whatever we have discussed? Any queries on whatever we have discussed? We'll go little further, little more to discuss one more part related to this uh, G9 cell matrix. So that part is about implications. What are the implications of this matrix? Attractiveness or strength matrix. For the upper left corner, which is in green zone, so that is very much attractive. So accorded top investment priority, strategic prescription is grow and build. So we can advise to grow and build the business by having top investment priority. We can have as much as possible investment in those kind of business. Second type of businesses wherein which are marked by yellow zone, these are the medium investment priority. Medium investment priority should be given to such business units, and we have to invest only that much which can maintain our position. So that is implication for that yellow marked sales. And the third category of business units, that is the right corner, which are marked by red color. These are the candidates, or these are the business units for harvesting or divestiture. So either we can think of harvest, that is we can continue, or we can divest. We can withdraw the investment from these business units and stop the business units. These may be candidates for an overhaul or reposition strategy. So either we can drop it completely, or we can redevelop these particular business units, and accordingly strategies can be developed for various business units. So this is a G9 matrix cell uh, model which we have discussed, which is useful for the business portfolio analysis. So before we stop, let me ask you people whether you have any query about what we have discussed. Any queries so far?
No, sir.
Okay. So what we'll do is we will stop here and we'll meet in the next session. Okay.
Yes, sir.
Okay. Okay. Thank you. Bye.
Thank you.
Thank you.